Happy Friday, everybody. Last Friday, last day, right, of January. 1/12 of the year is behind us. Welcome to The Last Word. Today's sponsor, Danda Road Consulting. And as always, The Last Word presented by Crispin Commentary. There, I got all the housekeeping out of the way. Jodi, KP, happy Friday, guys.
Happy Friday.
Yeah. Happy end of the month. It's crazy.
Right on. So let's dive in. Just give folks we'll give a little taste of what we were doing earlier in the week. The three of us were in Austin, Texas this week for the Mortgage Bankers Association IMB event, the Independent Mortgage Bankers Conference, which I always enjoy. It's one of my favorite events that the MBA does. Because it's very focused, right? It's very intentional, very focused. And it's a great combination of content and collaboration and camaraderie. And I think all those three C's were brought in spades this week. What give me your take, Jodi? How was the event for you? I know you're still in a little bit of a whirlwind.
I am in a whirlwind, but it was great. It was extremely productive, and I've been having this conversation with some people that are pretty close to me. So since you and KP are also very close to me, I'll have the same conversation. I felt like I've always done the right thing in the industry, and I knew that people came to me for information, but the outpouring of support and love that I have felt, at the conference, I can't even. It's overwhelming. So I'm glad that I got that out of the way, so that I can go into Monday into my new position. And but thank you for everybody for the hugs, for the well wishes, for the come to me for anything that you need. And I have to give a special shout out. I actually didn't see it. Someone had to send it to me because I've been trying to dig out and catch up from being out of the office. But Robin Clayton of PRMG leads up marketing technology and manages something ridiculous like 81 integrations or something stupid. And every time KP sees the technology, Robin's out there trying to manage it. But she put out the most heartfelt congratulations on LinkedIn, and it's really something special. So that was quite overwhelming for me. But again, I appreciate everyone, whether it was a fist bump or a handshake or a hug or, let me know what you need. I genuinely appreciate the industry, and it has been the entire industry I have gained a lot from over the years, and excited to give back to the members and to the partners of the Mortgage Collaborative through that. The one thing, and I was talking to loan officers about this yesterday, remember, it's probably like 2 or 3 years ago, we would go to conferences and you'd go back and the loan officers would be like, are they going to replace me? Are they going to replace me? I feel like I'm going to be replaced. For the first time, I think that I felt a shift in the conversations. I mean, there's a lot of distraction about everything that's going on with the economy and are we going into or out of conservatorship, but all of that aside, because I think that has been like overly communicated, and let's face it, none of us know what's going to happen. Like, let's just stop trying to shake the magic 8 ball and come up with the answer and talk about what we really do know. And from a technology perspective, it really is becoming abundantly clear, even though there's a tremendous amount of AI out there, the AI is there to assist us in our jobs. It's not to replace loan officers. And I think that there's a greater influence today on the value of the loan officer, the value that the loan officer has. And if we can use AI to take away the meaningless tasks that have to be done to originate a loan, and they can have more purposeful conversations with their home buyers or borrowers, that they're going to build lasting relationships that are going to go far beyond what any piece of technology can, because AI doesn't have emotion. So I think that like almost, I stay focused in the tech world a lot. And I really am starting to feel like loan officers are getting it. Like we can't be replaced, but the technology can help us do more in the same number of hours in a day. All I have to do is be willing to accept it. So I heard that a lot, and it's a huge positive. It's better than talking about interest rates and
Right.
conservatorship and whatever other nonsense that we heard this week coming out of DC. So
Yeah, I think I've said this. I know it's been said by a bunch of different people, but the loan officers shouldn't be worried about AI. They should be worrying about their competitors who are leveraging tools like AI to be more efficient, to be more creative, to bring more impact to the community and to the consumers they serve. And so, that's the message I keep kind of yelling from my little seat is don't worry about the tech, but worry about those that are leveraging the tech, because that's who's going to beat you.
yep, for sure.
KP, you and Jason shared a room that was locked off to the rest of us. And I know there's things you can't share, but just your sentiment from the week there in terms of what you kind of took away from the conference.
Well, a couple of my favorite things about the industry is just the collaborative events that I get to attend, whether it's executive roundtables or cooperative events or whatever the case may be. Mortgage Banker Association brings out top executives. I mean, Stan Middleman was there, Terry Schmidt was there, David Nayland, from Gill, that I can go on and on down the list. I mean, the top executives and leaders in our business, they come out for that show. And at the end of the last day there on Tuesday, Jason and I moderated a peer-to-peer roundtable. And so we had about 13 tables with anywhere from 6 to 8 people at the table, and we just talked about topics. What's everyone thinking about? TCPA, best cost-cutting ideas, AI, sales and revenue generating ideas. And we went around at open mic, and it was a top-tier collaborative hour and a half with a bar, which was cool. So that was part of the draw. I thought that was a great way to end the very awesome show. Obviously we had GSE sessions on Wednesday, but some people catch flights on Tuesday and they blow out of there. We even had people having to take off right in the middle of that session, but they made it a point to sit down as long as they could before they had to go hit the road. It was a great way to cap off the conference, the idea sharing, the vibe, and MBA is a great partner. They did such a good job putting that show on, and power pack content, and it was really exciting and tons of insights in there. So as we end January, which is better than January a year ago, I think we're off to a good start for 2025. I think people are feeling good about this year. We're here. 50% of loan officers are out of the business, and roughly, and that means there's less capacity. So, any little tick down in rates, we just feel busy like we did, July through November, and that just goes to show, kind of how razor thin some of this capacity is. Even some of the larger lenders out there that have been grasping tech for years and years and years, they couldn't handle all the business that came in when rates got down and the 10-year Treasury got to about 389, right up to the Fed meeting in September and the first 50 basis point cut. So we're feeling really good about this year. Capacity, I think, is in the right spot for many people. And it's going to be a great year. We're super excited.
Yeah, I'll give you a barometer. I don't know if it's worth anything, but November, December for us at FinLocker, a lot of great conversations, tons of presentations, tons of demos, engaged with, hundreds of loan officers. But in those months, very few were clicking the button, if you will, like moving to the next stage. And then this month, January, will represent our biggest month in terms of new loan officer engagement, adoption, signups. And so I share that because it a lot of the same people we've been talking to, it's like the calendar switch. They're looking at it as we got to get after this thing. It's not going to be given to us. We got to go get it. And so I think folks are definitely looking for those tools, those things that are going to give them a leg up against their competition. And again, I'll go back to what we opened with, which is AI. AI is a tool, right? There's all kinds of different flavors of it, but ultimately it's a tool that we all can leverage to compete and win against those that aren't willing to do that. So, Jodi, this I think we'll say it now. We'll say it again. You're going to get the last word on the last word, but this will be your last official show as a co-host. We will make sure, and we'll pull you back for guest appearances. It's been awesome having you on here on Fridays. But you had a big move, right? You had a big move. There was another big move in the industry this week. Katie Sweeney, who was the head of the Broker Advocacy Coalition, resigned her post, joined the advisory board of the same organization, and then was announced earlier this week that she's joined Rocket Pro, which is the TPO business inside of Rocket. I think it's great for Katie. Congratulations, Katie, out there. Awesome for her. I think it's a great move by Dan and Fawaz at Rocket to bring Katie in, and it just, to me, it just shows their further, commitment to the wholesale channel. And we all know when you have multiple players who are committed to the channel, not just Rocket, not just UWM, but folks like PRMG and EPM and others, it's good for the business, right? It's not just good for brokers, but it's good for the whole ecosystem. So congrats to Katie, congrats to Rocket. Looking forward to seeing the great work they do together.
Yeah, I'll add, I'm, as you know, Brian, I'm on the board for BAC for BAC, and Katie and I are both from the Dallas area. Although originally she's an Iowan, but dear friend of mine, she's, a lot of people don't give her credit. I mean, she was CEO of AIM, she stepped in a tumultuous time over there, and she's a high-powered executive in this business. And, Jodi, Christy, they're our co-hosts on the show in that cut from that same cloth, so we have a lot of dynamic leaders here in this business. And, all competition aside, the Rocket's a great company. They're a huge advocate of the NBA. They're very well run. Got tons of money, and they've gone through a big leadership change over there, and they've kind of changed their identity a little bit, trying to be a little bit more tech focused. You could see with Arun and their CEO, who I've never met, but I know Sigorka, good dude, was one of the founders of Sagent, and they got a good get right there with Katie, and it's funny because the reaction is different, right, depending on what your position is. But from my position, someone that also helps run a lender with a team, they're a well-run lender, and they just got stronger, and they're a good group. And she's a great advocate, for brokers, and I think that channel just got stronger with her in that realm. It's interesting with the channel mix because we're a unique lender with 3 channels. I guess you could say 4 because we also do delegated in our correspondent. And TPO broker specifically is an interesting dynamic. Whether you count a loan that gets originated and then sold, so some call it double counting, but that traditionally is how market share has been counted. So whether you count brokers at 16% or whether you count it at 25%, it's still a healthy part of our business mix. And in just my observation, and this is just a brief 24 years in the business, but the retail channel has the highest percentage of purchase business. It's always been the case. And when there's any kind of give in rates, wholesale has a little bit higher refi percentage, and then correspondent even higher than that. And so, we maybe don't want to talk too much about rates, but the most important inflation measure came out today, and it was about what was expected, still slowing inflation. It's called disinflation, not outright deflation, and that's good for rates. And so, a month ago, everyone was saying the Fed's going to raise rates, and then they which is dumb, to even say that. Because that's not the path we've been on. And so the trend, although it doesn't go in a straight line, is still for lower rates this year. And again, I've said this in the past, but Morgan Stanley has a 10-year treasury at 350 in the summer. The 200 moving day average is 425. So we've been pretty much at 450 all week. Tariff talk came out of DC. We're going to tariff Mexico and Canada 25%, unless, they protect the borders from fentanyl coming into our nation, killing our kids. Or helping with illegal immigration, and where's the tariff talk today? I know again this is today, but I mean, shouldn't we be spiking? Shouldn't we be back at 480? I've heard people call for a 5% 10-year. Inflation and labor is it, right? And so next week's jobs week, we'll get some more data coming out, and every channel wins with lower rates. Affordability for the lower end wins with lower rates. And it's actually a nice thing to have the pace be as slow as it is, because it doesn't allow a rush of people with money to crowd out, affordable lending when rates come down. So this pace has been a blessing. It hasn't allowed competition to come through. It's allowed us to tinker and make our platforms better and get ready for this year, which again has trending lower rates. And today was, and all the data out this week was more validation. Fed meeting, it's a good trend to be in. So I think, as we all position our companies, deepening our bench and investing in tech, and then just doing more of the same, which is good old fashioned, boots on the ground work, we're poised to win. I mean, I'm on a Teams channel with, our Southern California team and Vegas team. And, we're talking about getting Tiff Street's cookies out to all the open houses, in the delivery zones, with our realtor partners, which anyone who's listening to the show, feel free to reach out to me if you want to send a free tray of cookies to an open house that you're working, and you and your teams get with me. You guys know how to find me. You can message me on LinkedIn or whatever. There's a lot of things we're doing, just blocking and tackling, whether it's FinLocker or whatever the case may be. But purchase business is not going away. There's a lot of pent up demand. 7 Ds, deployment, diamonds, diapers, divorce, debt, downsizing, and death. It's all there. People need a roof over their head. So, and I'd be remiss if I didn't mention that it was nice to get a break and get some rain last Saturday, Sunday, and Monday here in Southern California, and really help contain the fires out here, and at least kind of put an end to the imminent threat. Get some stability and let people back in their houses, start cleaning up, and figure out what the hell they're going to do next.
So much there. KP, thanks as always. And folks, if you're not following KP's weekly videos, where you break it down for the average Joe like me to understand what the heck's going on. So I appreciate what you do every week, KP.
Thanks, man. Thank you. To quote 50 Cent, I talk fast. You got to listen fast, so I don't have to slow down for you to keep up.
Say that again? No, I'm just kidding.
I didn't finish the quote, by the way. He cusses.
Yeah. Did you guys happen to check out the CHLA IMB report that just came out right before the IMB? No,
I did not. The only news, and I just saw this, like Christie's working from behind the scenes, that McCargo abruptly leaves the FHL Bank of San Francisco. So I don't know if you guys saw that come out earlier today. Says that the Federal Home Loan Bank of San Francisco announced yesterday that Alana McCargo stepped down as the president and CEO. Said it was a joint decision with the board and McCargo. But there's moves going on everywhere. It's just like what it is. We are living in a changing world, and I think we always see this. We see a lot of changes happening in the first quarter of each year, and we're coming off of a 2-year struggle. So I think that but I hear the optimism with KP, and there is optimism in the industry. It's like we can deal with, interest rates where they are, as long as they're consistent. We'd be really happy to get into the low 6s. And even if we could have a blip where we ticked down, even if it is, 5.99%. I think that the emotional drive of that would be amazing. But I did not see the report, Brian. So let us.
I put a link in the comments so folks can go check it out. So Scott Olson, Taylor Stork, and the great people at the Community Home Lenders of America put out an annual report kind of on the state of the state for independent mortgage bankers. Detailed report, a lot of great analysis in there. Top line, the IMBs originate 83% of all single family mortgage loans. When you think about FHA, VA, Fannie Freddie, so conventional loans, IMBs outperform banks in lending to minorities and other underserved segments of the borrower community. As you guys know very full well, IMBs face greater regulation, i.e., greater consumer protections than banks. So these are all kind of highlights from the report. But when we talk about companies like United Wholesale and Freedom Mortgage and even Rocket, these are the biggest of the big, non-depository mortgage companies / IMBs, and that you all collectively really drive this business. And I know I got a couple comments on my post because I shared the report out on my LinkedIn this morning from some folks directly in the broker channel, kind of questioning, and I'm like, well, wait a minute, the biggest partners you all have in your business are IMBs, so we're all one here. We're all together.
Well, I think it's important to distinguish. I mean, there are lenders that take the risk, right? And so, we're the ones that take all the risk. I mean, literally all the risk. We have to eat all the losses and deal with, originators from any channel that flip pipelines and cause us to take hedge losses. And, it's kind of interesting because you have, generally a fiscally conservative industry. And I would even say generally conservative industry. We're dealing with money, right? Can't be too liberal. I mean, look what our government's been doing, spending like a drunken sailor, and we're faced with humongous debt and deficit, and it's really prohibitive for lower rates currently. But independent mortgage bankers are the ones that take the risk. We're the ones with the underwriting pen, and so to maybe tie it all together. And this is pure speculation. I've met Alana McCargo. She's great. She's a good operator. And my guess is why that was such a quick run is there was just a philosophical difference. There's a lot of talk about banks, the federal home loan banking system, providing liquidity to non-banks. And, I can't say that was part of her agenda or part of the reason why she had a philosophical difference. That's just me purely speculating, me as KP. God, I just said reference myself in the third party, but third voice. But it's okay. Banks are going to bank. Banks do what they got to do. IMBs, we have different regulators to answer to and different capital constraints. And it's good to see Bill Pulte at FHFA, coming from a private company, although they're publicly traded, but they operate like an independent. And that report from CHLA highlights the risk that we take. Our company is founded by Paul Rozo. He's of Colombian descent. We would never pander to that. We have more than 50% non-whites working in our company, and we do tough loans. We do tough loans. We take risk doing people with shitty credit because, we want to put people in houses. And when you widen your credit box well beyond what the banks allow, you take losses. And so it'd be nice to have some help from a regulatory standpoint to help us mitigate the risk that we're taking for affordable lending. And so, I gotta say that is that's a big deal. So I love that CHLA report. It'd be nice to get a little bit of love from the regulators on that front for taking said risk, because we're not going to help affordable lending. We're not going to help put more people in houses and get them on the path to multi-generational wealth if we don't take risk. With riskier borrowers. So, I'll just say that the trend though has been good, from a lending perspective, who is being lent to demographic wise and credit score wise. So I'll just shut up before I start to go on a larger rant.
Real quick, because you brought up an awesome point around the tough loans that PRMG does. There's, a lot of companies, almost all of them are IMBs that have a similar philosophy in the communities they serve. It's another reason why the role of the loan officer is so important, and it's not going away, because the community that you're describing, KP, where these loan officers live and where their kids play t-ball and soccer and they're ingrained in the community. That's how the consumers are getting to the PRMG logo. It's through that local loan officer, and I don't think AI is solving for that.
No, it's not. And again, I'm not trying to say that like juxtapose or any disrespect to originators. I mean, if you're a broker shop, you're in the community, you're doing the work, you're originating a loan. Loan doesn't come out of nowhere. We need originators of all kinds. And what I'll say is at the end of our peer-to-peer group, I had a 45-minute discussion with a gentleman named Woody who lives outside of Austin. Great dude. Got to finally meet him face to face. He was an expert witness in a case against a company that we won our case and settled, if you will. Not really allowed to say too much more about it, but he let me know of a big threat for IMBs. And if you're an independent mortgage banker and you took PPP money during COVID, there are 32 lawsuits lined up right now, currently, for the Department of Justice said, hey, we're good. You guys are good. And you know what? We debated it. It's free money. It's our money. It's taxpayer money. But we were doing well in 20 and 21. So we didn't feel good about taking PPP money. But I know many lenders did. And now this group of, blood-sucking, attorneys are creating this LLC called Real Tour. That's the name of the LLC in every state. And they're using that to sue lenders that didn't use the right code when they took the PPP money. They said they were a bank or they said they were a broker when they're really a lender or whatever. And now they're all being sued and they're all going to settle and it's going to be a lawsuit. And it's just the only people that win are IMBs having to pay money to blood-sucking attorneys. And that's a new threat. And I learned about that right when my peer-to-peer group was over. So I want to get the word out here. We're always under threat. So, lenders are under threat for that. And some people needed that PPP money. It was a tough time during COVID, and so it's always something in this business, and you're navigating so much BS every day. And just want to get the word out here and let it break here on Crispin Commentary. I mean, it's been out there in the news before, but it's getting some steam. And so if you took PPP money and you're an IMB and you're listening, you start doing a little defensive work and get your attorneys together.
Great tip there. So as promised earlier, we're gonna give the last word to Jodi this week, since this will be her official last word on the last word as a host.
Yeah, no, just so much gratitude and appreciation to the industry and the people in it and the people I have been able to cross paths with over the years, and very excited to continue our friendship and relationship as we move forward into another chapter. But I'm extremely grateful for those relationships and for Crispin's commentary, and Brian and KP. This has been fun. Of course, Christy, also quite the powerhouse, and is always willing to help and support and to provide information. So thank you to all of you for fun times. And I look forward to coming back and visiting the show sometime in 2025. So thank you so much.
Thank you, Jodi. Congrats.
We wish you best luck. This whole series of shows with Crispin, I know they've been doing shows for years, but Rich and Rob, I mean, that kind of set it off. What a great show that was going on. That legacy from Rich to Melissa to now you is powerful. So huge fan of TMC and you, Jodi, you've been amazing. We share advisory roles with Bryce Park Capital and investing in emerging tech in our business. And you're going to take TMC to the next level. It's a great foundation. It's already been laid before you, which you've been part of, by the way. I've been all those closed door meetings with you. And I guess since you're what do you say? You're a recovering mortgage banker since you're
I'm
no
a
longer a lender.
recovering
Yeah.
lender.
Yeah.
Since you're no longer a member, we're like, well, what should we do with her? Well, let's just let her run the thing.
Jim and I actually joked this week and said we should have just put it out on an announcement that I was promoted, because I've been so close to TMC for so many years. I actually had Faith look it up, and I became a part of TMC as a member in March of 2017.
Wow.
So it's been an 8-year run, and really excited because so much of my passion and vision aligns with what TMC has built over the years. And like now I just can't F it up.
Right.
You won't. And then put in Bianca over there and Dan the Road. What a great move. She's amazing. I mean, it's again, just more strength going into 2025.
Yeah. Thank you.
All right, guys. I promised all the leaders in the mortgage companies that we would close this right at the bottom of the hour so people can go fund loans and wrap up the month. So peace, y'all. See you next Friday.
Bye.
Cheers.
Thank you.
Thank you.
All right.